What I just posted a Family Guy video for everybody to view. For everybody's enjoyment, TrendSpider DSP25 gets you 25% off. The link is down below. That's what I'm going to be using. I got to turn on my Do Not Disturb. And my Apple Watch. I am long Apple and love Apple, but my Apple Watch didn't charge. I feel kind of naked today without it. Let me turn this down. I hope you guys hit that thumbs up button. I'm going to say that 100 times probably. I'm the only one watching myself now. Here we go to TrendSpider. Let's do some scans. Scans, and we're going to let's see, default. Let's see if this one works. It was giving me some issues yesterday with testing the strategy. Here's Goldman Sachs on the 4-hour algorithm. It's giving me some problems again. Let us log out and log back in. We're going to log out and log back in. I think it's got to do something with all of TrendSpider loves to use Google Chrome. I am not a Google Chrome fan. I am a Safari user. There we go. It's working a little bit better. Here's Goldman Sachs, and essentially 351 was the buy-in, 374. You have two green candles above the 9-day. God. Yesterday we were showing some slowdown in the afternoon in Goldman Sachs, and I still have not purchased this week's stocks pick. I have not purchased it, and part of the reason I did not purchase it is we lost the 9-day here in the afternoon. This is a 65-minute day trading candle. Essentially, over 5 years, if you use this day trading strategy, the strategy makes you 115% versus just 61% over the actual buying and holding. If we just look at the chart, which is about February 17th, it loses you about the same. So it makes you, well, I should say, you get out with a couple of losses here, but you gain here. So, yeah. Let's go to our market scanner. If anybody has any questions, hit them up in the chat window. What I do is go over the scans to see, this is the core investment portfolio. I use my 4-hour algorithm to try and find entries. Merck and NVIDIA has a secondary cross up. NVIDIA's up again. I mean, 222 here. We can look at NVIDIA. You got in the algorithm. I will show my algorithm here for NVIDIA, because you do get in at around 140, I think, on this algorithm. And it's doing it again. I think it's just got Chrome. The TrendSpider does not like Safari. It likes Chrome. And we'll run it again. Here, 147. So you have a secondary cross up. It's way high. I wouldn't necessarily buy in at this one. This run has been huge. But 144, you have a secondary cross up here at 221. I don't know that I'd necessarily buy into that, but it's an interesting one. Those are the two in our core investments. I will go over my personal portfolio, which differs slightly, which does have Wells Fargo. And our core portfolio does not house Wells Fargo, but this is a secondary cross-up again. I've been holding since about, I think, 41.50 is about where I got in. So personally, it is a trade. I'm not necessarily holding on to that one. I like it, but I'm not necessarily holding on to that. Lithium Americas got us in with a big gap. Well, actually, that's a secondary cross-up, I think. Let me look at the strategy tester. And I'm going to, let me see if this will run or if this, yeah, this kind of tells me the entry conditions again. Nope. This is the day trading, 65-minute candles. And the reason TrendSpider uses 65-minute candles is there are 7 candles exactly in a day. And that's why you're in at 25.70. So interesting on this one. Let's run it on the 4-hour because it is a secondary cross-up. You're in since 1891, not the year, the dollar amount. You have earnings coming up on March 1st. The RSI is super high. We'll put it in. I don't know why. Let me see. Let's look at energy names. I'm going to go and we look at XOM. That one's run quite a bit. You're out of it, but you're going to get back in. COP. It's going to get you back in after getting out here. You know, it got you out here, but come on. If you bought at 117 and didn't sell somewhere in the 120 range, or even when it hit the 200-day at about 119 just to capital preserve, you're identified as just long holding and just buy more. This Devon, I've held through this. It hasn't reached the 200-day. I didn't sell. I am holding on to this. I should have bought more when it got under 60. Oxy is probably heading to about 65. I would say it's at 64.49. Chevron, this is an interesting one because you've got this where it's using the 200-day as support around 172. I do think that you've probably got this gap up here as oil moves positive. FANG, same kind of thing. You just crept under the 200-day. Viper Energy, you got their earnings coming up February 21st. It's just hanging on to the 200-day, nothing more. Kind of putting in that spread. PXD, same kind of thing. I mean, it's using the 200-day as its resistance level right there. It's going to get you back in here at about probably 226 or so. You got a 1% gain on this. You could have easily just sold when you crossed the 200-day on this one. And XLE, as an overall sector, you're getting that MACD cross. You're using that 200-day as support. Look at what's happened every time. It's used the 200-day as support and then kind of just moved up a little bit. Marathon, we talk about a lot. This one, another cross up right there. From an overall standpoint, most of these look like the same kind of thing. This is Next Gen Energy. OIH, which is the oil services group, which just got you out with a 3%. Probably looking at another cross up right there. Boyle. Let's just say if you didn't get out of Boyle, I mean, I posted last night, if you didn't get out of Boyle, this shit moves fast. It's down 5%. So KOLD is up 5%. I mean, KOLD has all the momentum. There's no reason to, and Boyle, I will show you when we go to, I think it's a monthly or a weekly. Did I do it on the monthly? I may have done it on the weekly. No, I guess I did do it on the monthly. But I put in, did I get rid of it? No more data. Was it the quarterly that I did it on? No. I did something on this. LNG, this is Cheniere Energy, which has you out, but most likely has a cross up. You just crossed your ex-dividend date. It doesn't have a big dividend. Halliburton, Schlumberger. Schlumberger is one that, if you look at this one, I mean, it got you out, but it's going to get you back in with a cross up. I mean, when you got out, your RSI was at 29. There's no reason not to be. This one's going to use the 200-day. The lowest is going to come down is 50. I mean, this is one that just, they provide software services to the oil and gas industry. Their PE is 22. Year to date, they're only up 0.8%. This was a big winner last year. You're up 1 year, 40%. It's a good stock, Schlumberger. It's a good stock. Shell, they had their earnings. They kind of blew it away. UCO's up 1.25% in pre-market. SCO kind of down. CHRD, this is one that somebody in our group was touting at 148. I said, hey, it's on a run. I don't know how much higher it goes. The peak of it is going to be 160. It's come down here. It's obviously used that 200-day as a resistance level. I think you're probably moving more. I mean, I don't see a quite move up here. The earnings are coming up February 17th. Arch, which is coal, nothing in the pre-markets, but you got you out with a 3.8% gain. BTU, which is Peabody, which again is coal. You're still in this one at 27.53, 28.57. It's just hovering along that 200-day. You got their earnings coming up next week. And Lithium Americas, which got you, it's a secondary cross-up. So there is your look at the energy sector. Let's go to Market Scanner. We'll pick this. We got the energy sector right there. We will go to our levered ETFs. These are all the ETFs that we try and nothing crossed up. Low-cost Vanguard ETFs. We can look at these. VUG, which is growth ETF. Secondary cross-up. This has gotten quite a bit of cross-ups, I think. I want to say, yeah, it's a secondary one. I mean, I'll put it in there, but it's already run. In my mind, it's just run too much. But I'm telling you, the only company that hasn't come out, there's two companies, Apple and Amazon. Be honest, Siri sucks. I mean, anybody that uses Siri knows that Siri sucks. I can't imagine Apple coming out with a realistic AI kind of thing, but all they have to do is put out a press release. It's what Baba did. Baba put out a press release and it said, we're starting an AI bot. This is an interesting one because it's been beaten down. Now, it's been a slow crawl down, but an XLF has been, I mean, this is a secondary cross up here. It's just been a beast. Those are sectors. Morning, Sherry. Sherry, by the way, I looked. So Versus is the big mover down here, 11%. Faraday is kind of hovering around 80 cents. But, yeah. Bed Bath & Beyond is up 3%, ironically. But yeah, Sherry, I think of you when I see Versus. Let's go to not owned. That's my my personal look. I had good morning, Larry. I had chocolate chips again. Sherry, I love your optimism with your grocery money. I love it. Ooh. That's a secondary cross-up. That's an interesting one. And if anybody didn't notice, by the way, I posted that I think Uber's a $40 stock, and I posted that yesterday. I did not buy it. I'm just horrible at this. I mean, I really am. I got to get better. Hey, William. Happy hump day to you. I posted, there was a golden retriever sitting there holding a bone, and I posted on Instagram. He was, I just retweeted it, reposted it, but it was a call from his daycare saying, Harry's an aggressive humper, and the dog's just sitting there wagging his tail with his little toy in his mouth. We can no longer take him at the daycare. Come on. Dogs are the gift that none of us deserve. And by the way, if you're making money off of me, I'll tell you this. I don't charge for any of this stuff. I will never invite you to a Discord group. I will never say, hey, I want you to pay for my course. Anything of that sort. Well, I may say, give you some tools that would be beneficial. Like, for instance, TrendSpider. You get charged for that one. And if I do something of that sort. But just so you know, just a checkup with a couple of shots for 2 dogs yesterday, $350. Crazy. And that's not nuts here in Atlanta. It's not crazy. Workday crossed up. AMZN already in there. Okay, NASDAQ. We're going to go to the S&P. And I believe there's some cross-ups on the energy sector, like I always scan. And at some point, I've got to start moving. I think healthcare becomes a pretty good buy. It's just been lagging. I mean, UNH is at 475. Yeah. John, it's crazy, man. There's no way I could live without dogs, so I'm not, the expense to me is priceless. But, BK, Bank of New York. AMZN, NVIDIA, Wells Fargo already came up. One that I did take note of my own cross-up, by the way, was on earnings day here. When Wells Fargo, it dipped all the way down to $40.46 here. Your boy bought it at $40.50, so I didn't quite get the bottom of this. $41.50 was my price point. But I'm pretty happy with that trade. Got to be honest, pretty happy with that one. And BK, Bank of New York, I like that trade too. Financials have been doing really well. Let's go and do the energy sector now. And don't you hate it when you put your watch? I don't sleep with my Apple Watch, by the way. That's just crazy to me. I have learned, and I need to post this, with my 10-mile-a-day kind of walking/running regiment that I've done over the past 3 weeks. I've gotten to listen to some really good podcasts. Yeah, John, I just went over that. If you use Siri, it is so embarrassingly bad. Compared to Google, compared to Amazon Alexa, it's just embarrassingly bad. Comstock Resources. This is an interesting one. You got a gap up here. Let me see, CRK. This one's come up in a couple of discussions, I think, that I've seen. 17.14. They're trading at 11. They report it's Oil and gas. I'm going to bring it up. I mean, look at these guys buying. And it's not huge dollar amounts, but they're all buying at 18, 19 bucks. I mean, that's all August through this year. I mean, it's definitely a value stock. Its low is 716. It's at 11. I think I'm going to put this one in. I mean, I like that one. I'll do more research on it, but that chart just... What you can't see on this stuff is some of the dividends that they have. Like, that's a nice looking chart right there. It's gone right along the 200-day. You can't argue that it's, been a good investment there. Liberty Energy, kind of using the 200-day as BP. They already had their earnings. They pumped up. There's no reason to get into that one with that pump up. Although, does BP have a big dividend? 3.82. But you're 2% from your 52-week high. I mean, they're just doing well. Barnwell Industries. Not a super fan of it. So, John, you'll appreciate. I'm not. I am not a guy that spends money on a Peloton. I did the Peloton hack, so I bought a Sunny bike off of Amazon, and I used the Peloton app for $12. I have since stopped the Peloton app. Since I stopped the Peloton app, I don't use the bike at all, which is embarrassing to me because there's so many good things that I could be using that bike, for kind of, my stuff. And John, man, 6 days a week. My plantar fasciitis would kill me if I ran 6 days a week. That's why I'm walking. I'm trying to build that up a little bit. Can I just point out that Microsoft's at 271? 271. And yeah, the $12 a month that I would pay for the Peloton. By the way, Peloton hack, if you have a student in your household, if you have a student or a military person in your household, I think it's like $6 a month. So Wozniak is on the set of CNBC. Definitely not talking about Siri. But I listen. I wrote yesterday in my notes. I had don't forget about Peloton. You've got this gap down here at $13. If for some reason Amazon or Nike even hints that's essentially what's run this up from 11 to probably 17, is that just the assumption that maybe it gets bought out here. Do not discount this app. I really, honestly, I've tried Apple Fitness. I have tried, I think there's Active On is a free one. I've done all of that. Even the free Nike, if you don't know about it, Netflix has some free Nike workouts. And I think that's where it goes out, By the way, the Peloton hack is, just to go over it kind of simply, the Peloton hack is you buy a $200 bike, you get some sensors for your cadence because all of Peloton's classes are based on cadence. and you just use the resistance level as best you can. When they tell you to turn up the resistance, you kind of learn it and do it on your own. It's not, you don't get the feedback of the everything like that. But when you do the Peloton, if you use Apple like Watch and stuff like that, it all comes on your watch. You can see it on your screen. I mean, it's fantastic. It's totally integrated. The only difference between the $40 a month that you pay for the bike and that stuff is that you can't compete in the leaderboards. I guess you can't compete against friends or anything live. You can still take all the live classes. You can do everything. The Peloton hack is the greatest thing because, again, I love the app. I really love the app. And the number one rule that I always teach people is invest in what you love. That's how I got Apple. You know what's moving? GNS. This is the short seller hype. See how, I mean, it ran all the way up here to $7. It's at $6.56. I mean, it went from $6 to $7. It's a pretty big move in the pre-market. Now, the question is, does it have enough volume? You can kind of see the volumes just kind of leveling off. If I were to go to GNS, you know what? Let's look up GNS in our day trading algorithm. If you have not, John, come on. What are you, a Cub Scout? You need a badge? Yeah, I'm the same as you, Sherry. Let's do our 65-minute on GNS. This will be an interesting one. We're going to go to when it first popped. I'm going to move this down here. We're going to go to, okay. So when it first popped around here, I'm going to test this, and we're going to say chart. There's no way. The performance is whacked. Performance is whacked. Is this for real? There's no way. Oh, you know why? Because it got you out there. That's why. Okay. We're going to take it from here. Chart. Run. No, still no way. It's telling me making 715%, but the asset's making 1,124. The performance whacked. Calculations whacked on this one. Trade by next open. Yeah, long only. It says you win 45% of the time, which is interesting. And your average win is 26%. Now, we're going to expand this a little bit and bring this down. Yeah. For some reason, it's just got the chart performance is whacked. So you're out as far as this goes. Interesting. Activision Blizzard, interesting. UK regulators have decided that it could harm. I'll bring this up. Why not? Regulators. Of course. Okay, I'm going to start the podcast. By the way, boys and girls, I'm on GNS. This is the Safari view of GNS right there. Do not say I did not warn you that this thing moves quickly. If you held on to it yesterday at close, somebody was asking me. I just, I continue to say that Boyle doesn't have the momentum. You can try and buy in early. I just, if you're buying in early on Boyle and you're trying to time it, just bet on the Chiefs this weekend. It's the same thing. I mean, same exact thing. Oh, my neighbor just got back from flying to Johannesburg. He's a pilot. I know he was out of town, and he's in his pilot's uniform. I'm waiting to see if his cat greets him. Oh, I guess his wife was home. I didn't know that. Oh, he looks tired. By the way, if you don't do this and you see pilots and flight attendants, just thank them. I mean, those people, what they go through. And if you're a problem passenger, F you. Because you're an a-hole. Don't be a problem. Be a good human. I hear the horror stories from my neighbors about people who fly. Flying can be frustrating. It can be not a fun experience, but you know what? Come on, we're all in the same boat. It's not like you're special. Quit thinking you're special if you're arguing about stuff. Yeah, that's who they work for. Delta is an amazing employer, by the way. I got to tell you, I am not somebody that wants to go back to work, but one company I may actually go work for is Delta, just because I do think they treat their now. And I got to be careful how I frame this because I definitely have some biases, but I don't think airlines have the general public in their best interest. And I say that knowing that from a high level, airlines lose money. They're supported by the American taxpayers. And the airlines don't necessarily do a lot to quote unquote give back to the American taxpayers. They provide a vital service. At some point it becomes a commodity at this point, but taking payouts and then giving those payouts to shareholders, I kind of question the executives, but I mean, they're all compensated on, stock price, and employees get stock price purchases and things of that sort. But I'm just not a fan of, and it's probably the top 1% of that, the C-suite kind of folks, but they've got a job to do, and they're in that position for a reason. They make choices. So my criticism probably is unjustified, but the way I see it is them fighting with pilots unions, fighting with unions, not necessarily giving what may be right, going to the U.S. government saying, hey, we want handouts on these things. And I do see where the share buyback probably isn't the greatest use of capital, because maybe give it to the employees who worked hard through the pandemic and blah, blah, blah. But choices need to be made. just my own personal opinion. And listen, I'm very middle of the road. And if somebody were in the room and they made a good argument, I could at least be changed on that opinion. But just from an outsider standpoint, from where I see it. But Delta, I do think that they take care of their employees as one of the better airlines that takes care of their employees. Southwest, other than giving their employees crappy software, I think they do a pretty good job too. And my buddy works for United, and he likes them as well. So, okay, I got a long list of scans. I've got a lot of news to go over. One thing that I wanted to bring up for you guys who are in the private Facebook group is I brought this up before, but I wanted to bring this up. There's a member of the group, Tom, who kind of points out that CHRD has a dividend yield of 10%. It's not a 10% yield dividend. That's what it's currently yielding. And the reason it's yielding is because of these special dividends. You can see it's all special dividends. If you go over to over here to CHRD, it's got a 3.52% dividend. It's special dividends. You can see that $15 dividend is special. Now, when you go to FinViz, and I wanted to bring this up, I won't bring it up on the actual podcast, but when you go up, I brought it up in the Facebook group. But when you go and look, their earnings are coming up February 17th. Their dividend is shortly after that. They may announce a special dividend. There is no guarantee that they announce a special dividend. So buying it for a special dividend is just plain ridiculous in my mind. They are in oil and gas, and oil and gas has just been phenomenal. Now, over a year, this stock has made 18%. You can clearly see how it's greatly affected by the price of oil. And the price of oil right now is probably where it was here. So I don't want to say that they don't have room to go up, because I think a lot of oil and gas companies have done extremely well in making sure that they've optimized their business. Even though oil has come down, they've been able to make more money. This is just a rather newer company, a newer stock. And they are independent exploration and production. So it's, the sales at 140 and 160, while not huge, kind of, I mean, this 10% owner, September 15th, where they sold 11 million shares, that was to fund the business. I mean, that's core. That's their energy. They were funding the business. They were paying the special dividend. That's where they were doing it. But when you see sales at 160, I think you're capped at 160 and you're trading at 141. That's why you're seeing right here. And right here, I mean, you're just seeing when it gets around 155, 160, that's where they want to keep the stock. And that's where they'll pay a special dividend. And that's where they'll, get rid of their funds. So I wanted to point that out. And if you want to see it, here, just Google CHRD dividend. $4 special dividend. And the regular dividend is 37 cents per share. They might have upped it to 50 cents here. But a lot of these are special dividends. Maybe 58.5 is the right one. They did not double it to $1.25. Those are special dividends right there. So their yield is, let's say, 3.52. So what's 3.52 divided by 141? Oh, no. What is 3.25% of 141? It's $4.5825. $4 per share. So you'll get $4 per share. And Bank of America said buy at 178. I tend to think that the cap's 160, but I mean, look at ATVI has been a good play due to the volatility from constant. Oh yeah. Yes. I don't, Christian, I completely agree with you. I mean, it was even a good play before. Warren Buffett is bought in at about 70, I think, 71, somewhere in that neighborhood. That was about this time frame where he made that announcement, where he was buying in. It was right here where he said, it's not a bad buy, a bad bet. So I think 70 is your floor. I completely agree with you. Now, the caveat is here's the thing. There's a poison pill. Let's see. ATVI MSFT deal poison pill. I should do. Let's see. Breakup fee. There we go. Deal is said to have a breakup fee of about $3 billion. So Microsoft, if they don't take over Activision Blizzard, pays Activision Blizzard $3 billion. Where's the market cap? What is their shares outstanding? Market cap $60 billion. So they're going to pay them what? 5% breakup fee of the complete market cap. That's huge. That's enormous. So you could see a nice 5% pop. I mean, let's look at a long term of this. Let's look at a weekly. And this is 2021. This is pandemic right here. So pre-pandemic, you're looking at about a $65 stock. The actual value today is probably, you still have this, and this is a weekly chart. You still have this gap here where the deal was announced back here in January. You have this gap between 65 and 70. So I completely think you're right, Christian, that trading wise, it's a good one. So Tesla, Robert, this is hard, and I've got it in my notes today because the Model Y is the best-selling vehicle in California. Not the best-selling electric vehicle, the best-selling vehicle. And it's left the Camry in the dust. 1 out of every 10 vehicles sold in California is a Tesla. That's huge, thinking that they only really have 4 models, of which 2 are, more likely the ones that people are buying. So in 1 in 10 with only two models really is a huge opportunity. Here's the other thing. Musk, I think they're having a product day in March where Musk is going to announce phase 3. The Cybertruck is going into production later this year. Southern California is the largest pickup truck market in the U.S. Where do you think that Cybertruck is going to be? I mean, they're going to just blow it out of the water. Yes, it's ugly. Yes, it's, but Marquise Brown on his auto show last night, he did a great job, a phenomenal job of just talking into the camera and saying his experience with other people who drive electric cars. And he ran into a woman when he was going out to lunch, and she waved him down, and there was a charger, and it was a mall charger. And so anybody that doesn't know this, there are different charging apparatus between Tesla and other cars. And so this particular woman, it was her son's Model 3, and it was a charge point charger. So she needed an adapter to actually plug in. That was the first thing that Marquise explained to you. You need an adapter. Second thing, it was a charge point charger. So she needed the actual app to actually download. Then when he went inside after all of that, she was setting up the app, and he comes back out, and she goes, "It's still not working." And he's like, "Ugh, I got to explain this to her that, some chargers just don't work." There was a second car there, and the second car was kind of, grabbing from the other space, and so he made the assumption that, hey, this charger just doesn't work. So he explained to her that, hey, right down the road, there's a Tesla charger. You don't need an adapter. You can just plug in, and it's high speed. It's not some of this low speed stuff. So there's a big learning curve with anybody using a vehicle other than a Tesla. That's why I think the Cybertruck, you've got, a couple million Teslas out there now. Probably close to 3 million Teslas that are on the road. And that's just since 2018. Remember, they're only delivering about 1 million cars a year. So it's probably about 3 million cars that are out there, maybe closer to 2, but it's between 2 and 3 million that are out there on the road. You don't even have anywhere close to that of all the other electric vehicles kind of added up. My parents have their Model X. That's the one with the Falcon wing doors on the back. And they are looking at a new car. Their lease is up on the Model X, and they're like, hey, we want another car. We want an electric vehicle, but we think we want to go to Tesla. Explaining to 80-year-olds that a Tesla, when you plug it in at a Tesla charger, is nice and easy because it's standardized. The car leads you to the charger. You back up. You plug the car in. With every other car, whether it guides you to the charger or not is manufacturer specific. Most GPSs like Google Maps and Waze do not talk to your car and say, okay, you have this amount of thing. There is an app called a Better Route Planner that actually does this for you on your phone, and it guides you to chargers and things of that sort. It is significantly optimized for Tesla, but explaining to the 80-year-olds that, hey, there are several charging systems and several of them take adapters, and if you're going to use these, you have to go to the adapters. The other thing is, if you've ever been to one of these Electrify America high-speed chargers with the Camidio, I don't know how you say it, but it's a standardized charger. The thing is the size of a wrestling ball. I mean, it is literally like, the size of just my head, as far as the charger goes. Then you go to a Tesla charger and it's basically like a stick. I mean, it's tiny. How anyone thinks that Camidio, now it's got to do with heat and charge rate and things of that sort. I mean, there's some safety in there, but I think Elon has showed and Tesla has shown that their chargers work, and it's really good. But yeah, do I think it's going back to 185? Long story short, I think you're more likely to hit this 145 to 154 gap. I think with him reducing the cost of the cars, with the infrastructure, with the IRS identifying the actual dollar amounts that they'll give people back and clarifying things, with demand at near 2018 levels right now here in the U.S., with his expansion of not only Europe with the Berlin factory, but with China, and China opening back up and demand semi coming back. The only question is, does China do something where they favor their EV makers like NIO? over Tesla. I don't know. I mean, China is key to Tesla. It's key to Tesla's growth. But you're right at this 200-day. This is Tesla. And I'll kind of go over this. You know what? I'll save this for the podcast. I'm going to start recording the podcast now. I think Tesla, honest to God, I looked at it. Here, let's go back to weekly. Let me see if I can pull you back to 2018. So, September 2018, right here. Stocks trading at between 17 and 21. So, say $20. I had $60,000. I put it into my car. And say the stock was trading at $20. That $60,000 would be worth $600,000 today. Do I think it goes up from here? I don't put anything past it. Now, some people will say, God, that valuation is just crazy. Yeah, the valuation's crazy. But they've been able to grow year over year significantly. If he gets back in there and gets out of Twitter, I've said this before, I have no doubt in my mind that Cybertruck, that autopilot, this stuff will all come. Now, he does have a problem, and I'm in that problem. You know what? I'm doing this on the podcast. I'm going to bring it up on the podcast. Good morning. It's Wednesday, February 8th, and I am spouting off on YouTube about Tesla. But let's go over. Where are we? Where are we going? Where's this market? What's this market doing? Powell spoke yesterday. Jerome Powell said, hey, I see higher rates for longer periods. What'd the market say? We know. You told us that before. And the market continued up. You can see SPY on my screen on the 4-hour algorithm. We had a buy-in at 383. You're up at 420. We'll go to a weekly because I don't want to go to a daily because I don't think a daily tells the story. I think a weekly tells the story. You can see here from COVID, we had a clear climb up to January 2022, at 477. Then you kind of just, you had your bear market rally here in March, which brought you from about 415 up to about 450, 460, somewhere in that neighborhood. Then you proceeded to go down to about 383. Then you had your bear market rally right here. And you went up to about 430 and you crashed back down. And you crashed back down to the October lows of about 348. And this is SPY, so it's not the S&P, it's SPY. So add a 0 to it, and that's the S&P. But SPY went down to 348. Then you had your rally into the end of the year. And in December, you failed. And you went down to 374. You didn't make it back to the 340s or the 350s. You kind of hit this 200-day. And you can see the last couple of times that it's hit the 200-day was the 2018 crash in November and December, which took it down significantly, and COVID. And so you touched this in October. That is the base that we're talking about right now. Now, does this put in some type of rally back to maybe 460? I don't think so. I think the reality of it is maybe we get to 430 here, back to the August highs. I don't think we get back to the March highs on this rally. I think this one gives up, and I think it pulls back not all the way to the 350s, but I think it pulls it back probably to about 380. And so this, again, anybody who tells you that they know where it's going, they don't. This is just my guess based on the weekly. The current rally has legs. It is well above the 9-day on this weekly. You're seeing the 50-day kind of, the 9-day and the 21 are crossing the 50-day. We haven't been under the 50-day in very often in probably the last 10 years. You can see We went back here in 2016, 2015. We went under the 50-day, but we had a clear rally up. Then in 2019, like I said, you went under the 50-day, and COVID brought us under the 50-day. For the entire year last year, we were under the 50-day. So this is the first time since March of last year that we're over the 50-day. No need to get like, oh my God, it's going to continue to go up. Personally, I think that we're going to see some type of pullback, and I think we get back to under 4,000. I am not buying in this one. The last 2 days, we have started off red and wound up green. Simple as that. You've got more Fed people speaking today, so you've got more catalysts that could come by, but the Fed people are simply bringing this down. Now, let's talk about artificial intelligence, because we haven't talked about this enough. I just learned this, and maybe you guys don't know this, but ChatGPT, which is all the rage, and that's what all of this artificial intelligence stuff is trading on. You know what the G in ChatGPT stands for? I did not know this. It stands for Google. And you know why? Because ChatGPT, it is based on all of Google's data. So when the CEO of Google says, hey, it's all hands on deck, we're going all in on artificial intelligence, Sam Altman, who runs ChatGPT, is a genius. I don't think that he's more of a genius than many of the engineers over at Google. Again, if Google identifies these guys and the geniuses that they have on staff, and they can pull this off, I think they'll jump the shark, as they say, over ChatGPT. Now, all you need to do to know where you're at with this AI stuff is that yesterday Microsoft said, hey, we're going to incorporate ChatGPT into our Bing software. Boom. They were up 7%. Today you're up 2%. You've gone from 230, which was down here right before earnings, and I said, guys, if you're not grabbing Microsoft, you're crazy. 231, you're up you've gone all the way up to 275. Right now you're trading at 274. I would not buy it here. The RSI is way too high at 75. You are overbought. Your ex-dividend date is coming up. But I do think that these guys will incorporate ChatGPT into an ecosystem that runs really, really well. So you don't have to play these AI, which is CP3AI, I think is the name of the company, C3.ai. You don't have to play these high flyers. You can play the tried and true. And just to give you an idea of what a press release does for a stock, BABA just put out a press release that they will have a chatbot. That's based on artificial intelligence. I think they named it. This caused the stock to pump about 3%. Just that one little bit of news alone. So I think you've got an opportunity here to get into AI, and I think there's several places you can go. I think the first is probably Amazon. Amazon has not said anything about artificial intelligence, but you guys have Alexa devices in your home. I guarantee you, most of you have Alexa devices in your home. Most of you use Amazon. Imagine the data that they have on you. That alone should be worth the price of admission here. I do think that we will probably go under 100, and that's where I'm waiting to add to my Microsoft position. But I don't think, if they come out with something tomorrow that, say they have all of a sudden have a Super Bowl commercial that mentions AI and it mentions ChatGPT or something, you saw the AI CEO talking about supply chain and blah, blah, blah. Well, all they have to do is do that, and you've got a $120 stock here. Easily $120 stock. Where else can you go? Like we said, Google. Google is the G in ChatGPT. If you don't think these guys are going to figure it out and their valuation isn't worth it at these low levels, under 100, buy it all day long. Buy it all day long. The danger with Google right now, and the reason it's down 6%, I don't know that that's the whole reason, But Microsoft having ChatGPT and saying that they're going to integrate it into Bing, yesterday's traffic on Bing was enormous just based on that news. That's why you're seeing Microsoft up, Google down, because Google's golden egg is advertising off of Google.com. If you go to Google, Google makes money. If you just go to Google, Google makes money. That's how they fund their entire program. If you use Gmail, here's what I want you to think about. How many people use Gmail? I had a friend who handed his resume to another friend who's a recruiter yesterday. And this particular friend had an MSN email address. My recruiter friend said, "Are you kidding me? Who doesn't have Gmail?" So, that tells you the power of Google. Where else can you go? Obviously, Microsoft. You can go with Microsoft. By the way, Amazon, to go back to Amazon, guess what's powering a lot of ChatGPT? It's the Amazon Web Services. So they're going to make money off of that stuff too. Now, Microsoft has Microsoft Azure. Google has Google Cloud. So there is some question about how much Microsoft will get out of it. But again, Microsoft is probably offering up ChatGPT, the Azure cloud system, for them to use because ChatGPT is quite expensive. But Microsoft is up at $275. I wouldn't buy this one right now. There's too much hype around it. In my mind, I think you come back down to these 250 levels right here. There's a small gap right here that looks like it was filled. But I think 250 is probably the comfortable placement of Microsoft. They in their earnings, they even announced, they announced it. We're going to have a couple of years of difficult, cost constraints, which means that they're going to have to cut costs and customers will be looking at the costs of Microsoft. So they're looking at that. Ever since their earnings, it's just been a rocket ship up. Where else can you go? Well, NVIDIA. NVIDIA has had a rocket climb because there is no better chip for artificial intelligence than NVIDIA chips. And our algorithm got you in at 147. You're up at 226 right now with all of the momentum in a positive favor. The RSI is at 76. In my mind, I think your base is at 170 here. I think you come down to 170, and I think that's where you can buy it. I don't want to chase this one. Yes, it's a $400 stock. If we go and look at NVIDIA, it is super expensive. The PE is 94. The 52-week high is 289. You're only 23% below your 52-week high. Year to date, this one is up 51%. You're only on February 8th. You're 1 month in and you've made 58% on your freaking, just one investment. Incredible. Again, this is an AI hype, and I said it yesterday and I'll continue to say it. When you have this type of thing, these stocks run. And this is the new EV. This is the new .com. So if you go back to 2018 and you hear about all the success of Tesla, and you look at NIO, and you look at, even Nikola. Nikola was one that just basically put out a video of a truck rolling downhill. And they were gaining 200% per day just based on hype. This is AI hype. This is what this does for you. So find a company that doesn't say AI, but will say AI, and boom, you've got your thing. Now, I will warn you, there have been some questions about whether Apple will get into this or not. I am an Apple bull. I love Apple products. I hate Siri. And sorry, but if Saturday Night Live were going to do a skit and they were going to say, hey, the smartest things about, some of your speakers and stuff, Google would be the smartest. I think Amazon would be the second smartest. And then Siri would be a long distance third. I just don't see it. I don't know any other home automation stuff that has speakers and stuff like that. So those are the three main ones. But I wanted to bring that up. I just didn't know that G was the thing in ChatGPT. But that's enough about AI. You've got your AI plays. You can play those other ones like AI. What were the three that we had yesterday? Let me see. AI, BBAI, SOUN, MLGO, VERI. All of those are fine. SECO. All of those are fine if you want to trade them on a trade basis. But if you want to actually just put money in companies that are basically going to use AI as a platform to build on their current stock base and actually make money and have solid bases of stock prices where you can just put your money and not really worry about it, because FYI, I don't have a job, but I think most of you do. So who wants to sit by their computer all day? That's the problem. And that's why I say go into those. One that I wanted to bring up was, I know somebody in school, I forget his name, but he emailed me and he said, hey, Bill.com on their earnings, they're, they could pop on this thing, blah, blah, blah. And I said, hey, don't buy it on earnings, but any reaction in the market is an overreaction. Bill.com went all the way down after their earnings, down to $91. Today, that stock is at 102. That's just 2 days ago. Last Friday. So what, 3 days ago? 4 or 5 days? 4 trading days ago. The algorithm still doesn't have you in because the MACD fell that hard. But at 102, I wanted to bring this up because you do have this gap that goes all the way up to 126. And the CEO was on. I saw him interviewed, and he said, hey, our business isn't as bad as the stock price kind of says. And they never say that, but that's kind of what he meant. So even if you get this gap up here to 108, that's a good 5-6% move. And that's the beginning of this gap. The end of the gap is at 126. I wanted to bring that up because they did go from earning 14 cents per share to earning 42 cents per share. The problem was their guidance, and their guidance didn't just justify the valuation that they had. They're not earning money from an actual standpoint, just from an EBITDA standpoint. And there's a big difference between that. But their forward PE is 86, so it is expensive. But I do think that the CEO kind of came out and they took a bigger look at this business. And from $91, if you bought this at 91 and you added some of this, boom, you've already made your 10, 15% on that one. Great trade on that one. I think that was brilliant. I did not take it, but I wanted to bring that up. Enphase, some of the ones that I saw yesterday that had big moves. Enphase went all the way up to 246 yesterday. It's trading at 228. I don't exactly know what happened, but yesterday it did go up to 246 in the second in the afternoon. This morning it seems to have gone up to 246. It was the after hours. It's trading at 229. One that I personally hold, I don't have it in our core portfolio, is CrowdStrike. The reason I own this one but don't have it in the core portfolio is because it's not making money, and I don't feel like leading you guys into a company that's not making money is right. The RSI is a little high, but CrowdStrike came all the way from 107, and it's at 118 today. The algorithm had you buy in at 97. You are in this upward trend. It has broken that top wedge. I think it uses the 200-day as its resistance level. That's at 132. Don't listen to a guy on the internet about what to buy, but CrowdStrike is one that's moving, along with all of the other, by the way, cybersecurity firms. They're all moving. This one has a forward PE of 57. It is not making money. Year to date, you're up 8%. I am down on this one. Fortinet is another one that was moving, FTNT. This is the only cybersecurity company that's actually making money. The reason it came out, all of these is because Fortinet had their earnings. They went from 53. They're trading at $60 today. 53 was where they were at. They're covering previous gaps here. And you see this gap is all the way up to 62. I would think that's 100% obtainable in the next couple of days if we continue like this. If we do see a red day today, then I think you're going to see it go down. But from the previous earnings that you've seen, it's just continued downward, hasn't really moved that much. I would probably wait for this one to come back. You're going to see a pretty big gap here between 54 and 58 that probably gets fairly filled. Another one that I do have in the core portfolio is PanW. These guys aren't making money, but this is the biggest cybersecurity firm, and I like them. And their earnings are coming up on February 21st. And if we just saw Fortinet, I think this one has a big gap here as well. you're going to see it. The algorithm has us in at 138. You're at 167 right now. So Pan W is moving. Another one that was moving on our core portfolio is TSM, Taiwan Semiconductor. This one is up 1.2%. The algorithm got you in at 74, still hasn't gotten you out. The MACD has crossed down. It looks like it's going to cross up again. I think you've put in a base here at about 90. If it gets down closer to 90, I think I may take some. There is this gap here between 81 and 84 that I've been waiting for. If the market comes down, if things just settle down a little bit, I think that's where you're kind of going to cover that gap. And I'd wait for it to come back there. It is extended. Identify that you are in your 52. I think you're within your 52-week high. 52-week high is 128. And that was hit, I want to say last year at this time. But yeah, everything was high last year at this time. So those were ones that were moving. Two announcements came out and kind of moved stocks upwards about cutting jobs, and that's Zoom, which moved up. They're trading at 83 right now. ZM, I would not put money into this stock. I think it's a $40 stock. They have put in a base here between 60 and 70. That seems like a buying opportunity. They're trading at 83. I think they're going to come back down to their 200-day. It's just not a company that, at best, they get bought, but I don't know anybody that needs them. The other company that announced layoffs was eBay. I think it's 20% of their workforce or 10% of their workforce. Moved the stock a little bit, not much. This one has been on a great run. December 29th, $41. You're up at $50 today. So great one. CVS officially announced that they bought Oakmark, which is the healthcare services, and it's at $39 a share. CVS gapped up on their earnings with that announcement. It went from 86 to 88. It is a good move for them, and part of that move is because they can take advantage of some of the federal funding once they complete that thing. I don't completely understand it. Do your due diligence, but Oak Street, the deal price, the Oak Street, the symbol is OSH. The deal price is $39 per share. This is trading at $35 per share. So if you want to wait it out, do your due diligence, understand the timing of this. It is not something that happens overnight. It will take a long time. In my mind, I think you've got this gap down here. I think you come down closer to 30. If there's any kind of regulatory, hey, we're going to put some barriers up to this. But OSH is that, and remember, it's $39 per share. One that is another takeover, Activision Blizzard. The UK came out and they said, I'm looking for my notes, UK regulators say it could harm consumers, this deal with Microsoft, and it may not be allowed. The difference between the UK and the US is there's no appeal process. So if the UK finalizes that decision, Microsoft cannot buy Activision Blizzard in the EU. Essentially, it's just the UK, but it would include the EU because most likely that's what the EU would find as well. There is a $3 billion breakup fee that's rumored in this one. I think that's 5% of Activision Blizzard's market cap today. So you could see, again, I think the $95 price target, if you were to buy here today and the $95 price target, I think it's a stretch. This could go on for years, though. But Christian brought it up on YouTube. It's been a great stock to trade between 70 and 73. You've hit this bottom down here at about 70, between 70 and 71. Right now it's trading at 74. I think you pull back towards that 200-day at 75. I 100% agree that this could be a pretty active trade. Uber came out with results. They beat on both the top and the bottom line. It's up big. It's at $35. I think it's a $40 stock. They announced that they will be cash flow positive by the end of the year. I believe that's what Kashkari said. This one has just been a great mover. I do think you see it coming back down to it, fill these gaps at 30, 32. I think this gap down here, if like at the beginning of the show we talked about the S&P goes down to 3,700, I think you see this back down here at 26, load up on this one. This one might go in the core portfolio. It is that good of a company. I really, really like this company. Think about it. They have a tremendous, you talk about, artificial intelligence. These guys have enough information about artificial intelligence. Kashikaria was talking about it, how artificial intelligence, say you want to go out to dinner with a friend and you're in an Uber and the two of you don't know where to go. You could ask the Uber app, hey, where should we go? I like this. I like this. It'll look at both of your preferences, and it could say, go to this restaurant for the two of you. I mean, that's it's a great use of artificial intelligence. There are some analysts, by the way, and I want to point this out because, like I said, I think it pulls back to that 3,900 level on the S&P. There are some analysts that are talking about February 15th being the day that the market gets taken down. So from now until February 15th, they're assuming you might see some choppiness, but you're probably going to see it up. February 15th, they believe that it starts to move down. I can't tell you exactly why they think that, but that's the what I'm looking at, and I've seen the date a number of times. Michael Burry, who said the crash, I mean, he's still saying that this is just a bull market, a bear market rally. So, and for the past 2 days, by the way, I think I said this, we saw red arrows to begin with, and we saw the market come back. Today, you're seeing red arrows to begin with. I don't know if we're going to see green arrows to come back, but you're seeing red arrows to begin with. I want to point out, and I'll try watching this, and we'll set up some day trading. TrendSpider, I posted in the private Facebook group that we have. And it's free to join. You just have to ask to join. That's it. I don't charge you anything. But the TrendSpider has 5 day trading strategies that looked really good, by the way. And I like them, so maybe I'm going to start trading with them. Sherwin-Williams. This was a company that was a huge pandemic winner. Everybody painted their house. Everybody was going into Sherwin-Williams to get paint. This was downgraded. It's a big pandemic stock. This is like Peloton. This is like all of those. If you look at this, now you'd be in this at 243. It's currently trading at 234. The algorithm has you in it, but I don't think that you should get in it. If you look at this pre-pandemic, this was a $189 stock. I think that's where you hit in October. I don't know that you can count on 189, but I would definitely look at it down towards the 220 mark. It's a little bit overvalued. There's some weakness there, blah, 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 the whole thing. But we talked about, I wanted to make sure that you guys knew oil is up in the pre-market, probably based on the State of the Union speech, which I did not watch, so I saw some mocking of it this morning. I shouldn't say that. I saw some good and some bad of the speech this morning. I am hopeful, and like I've been, that Biden moves more towards the center and can work with McCarthy, and get things done. I hope that the extreme left of his party doesn't pull him like he has. And make no mistake, he had to go fully left on that stuff. I think he's wanted to, but his career in the Senate was pretty moderate. I mean, he voted for Clarence Thomas. He's been pretty moderate. I don't know if he voted for Clarence Thomas. I just remember him being embarrassed about the Anita Hill stuff. But he has been moderate. So my hope is that he can get things done. And the guy's a negotiator. I mean, let's be honest. He says extreme things to try and push negotiation, just like anybody in the Senate does. All they want is negotiation, but they want you to move their way. But I do think that Biden's a moderate. So I'm hoping oil is up. He admitted that we needed oil, he said, for 10 years. And then everybody laughed, There is no freaking way that any oil company can drill and say, hey, the payback is 10 years. It's a 20-year payback for investments in the oil industry. So I thought that was funny. Let's talk about Tesla. And I got asked Tesla question on YouTube right before I was coming on. And I was spouting off about it. Tesla is an interesting one because I've said that it was going back to 80. And then what did Elon do? He pulled the rug out from under me. He cut the prices. He created demand like we haven't seen since 2018. You got a 4 to 6 month wait now for a Model Y. The Model Y is the best-selling vehicle in California today. That's not just the best-selling electric vehicle. It is the best-selling vehicle in California today. 1 in every 10 vehicles sold in California is a Tesla. This is what you have to know. Southern California is the largest pickup truck market in the U.S. Tesla is coming up with the Cybertruck. They are having a road show, a product show in March. Elon will outline phase 3 of his sustainability platform. I forget exactly what it's called, but it's phase 3. He'll outline it. He'll announce that the Cybertruck will be going into production. They may even show the production vehicle of the Cybertruck. I've seen the videos of it. The thing is freaking huge. I am in the market for it, but based on the size and having driven the Model X and S, which I think are a little boat-like, the newer ones are better than the older ones. But I'm not in the market to get one of the first ones. But I do think you're going to see an enormous explosion of that Tesla Cybertruck. And I think there's 2 reasons. First off, I think there's a huge electric pickup truck want and need demand in this country. Second, I think of anybody in the electric market, Tesla's the one that has the charging network. If you haven't watched it, Marquez Brown on his auto show, just look up Marquez Brown Auto and you'll find it. MKBHD. He had a great video last night about how confusing charging structure is for those that don't have it. Now you can say, I'll never get an electric vehicle. I'll never do this. You don't know the joys of actually having an electric vehicle and the comfort of leaving your home every day with a full tank of gas, not having to stop at the gas station, not having to, pick up that freaking gross handle that everybody else has touched after picking their nose and stuff like that. I mean, just yuck. So I myself love the electric vehicle. I tend to, again, if you're not somebody who's an early adopter who understands that there are issues, blah, 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 you're not going to be in the market for this truck. But I do think that the Tesla has invaded that market enough that there will be people who will be selling their Model 3, their Model Y, their Model X, their Model S, and getting that Cybertruck. So to me, I think Tesla has the opportunity to pull back here to 145. We have broken 200. Right now it's trading at 201. It's up 2%. You've got this gap here between 260 and 268. I said this before. It's one of these 2 gaps. My guess is it pulls back here to 150 to 146. At that point, I'm probably adding. Reminder, I don't hold Tesla shares. I sold them for a gain in December. I can get back in whenever I want. I absolutely should have bought back at 100. When it dipped down to 100 on January 6th at 101, I should have bought back in. I was thinking 80, and that's a good 20% down from 100. So it's not like I wasn't, was trying to time it by $1. I was trying to time it by 20%. But he cut the rug out, and he increased the prices. He increased demand, and he's got everything going for him. Now, if he finds a CEO for Twitter, this one right here at 260, that's where it is. Would I buy it right now? No. And the reason is the RSI is at 75. That MACD is super high. I think with SPY and with Tesla up in this area, I just don't think it makes sense. There are better places to put your money. Or better yet, just hold your money. If you're dying to get into Tesla, buy it at 200. If you have, say, $1,000 to put into Tesla, I would put $100 in today. If you're just dying to get in there and you don't want to miss out, put $100 in there. Because you know what? If it does come down here to 140 or 150, big deal. What'd you lose? 10, 20 bucks? You lost lunch. But if you put the full 1,000 in there today and it pulls down back down here to 150 and all of a sudden you've lost 20%, that's a big chunk of that money. Now, if you want to just buy it and forget it, buy it and forget it. In my mind, I think you're fine with that one. I think this one's kind of like Apple. I think it trades on retail. It does not trade on valuation. It trades on retail, and people love it. So bring that up. Just so everybody knows, the 10-year bond rate is at 3.6. It's inverted to the 2-year, which is at about 4.6. The inversion is one of the largest that it's ever been. Here's what that means. And when you hear this stuff, this is what that means. So in 10 years, you're getting 3.6. The assumption of that market is that at some point in time in the next 10 years, the Fed is going to pull back rates to 3.5, which is typically what it will do. If we get to the assumption is for the next 2 years, we might be at 5. That inversion has always indicated a recession. Doesn't necessarily mean a deep recession. We're kind of in no man's land right now. The market is trying to time things. I liken this to a poker game where Fed Powell is kind of holding the hand and the market is the opponent who's basically pushing the chips all in and daring Fed Powell. Fed Powell could keep the rates high, even raise them past 5%, and show that he's got a royal flush. Or he could be completely bluffing and just show that he's got a pair of queens and all of a sudden we win. The market's basically saying that for all you poker players. GNS, by the way, is moving again. But let's get into scans. We can day trade GNS all we want. Let's get into scans. One that came up, Merck. We talked about Merck being a great one on a pullback. Merck has a buy here at 105. It had a buy here at 104. Got you out with a little loss, but it had all the confirmation. Touched the 200-day, used the 200-day as resistance. Healthcare has been a bear this year, but it was such a bull last year. I don't think 105, I don't think this is bad. This is in our core portfolio. I might add some to my portfolio on this one because, again, it's just, 104, 105, who cares? No big difference if you're just buying and holding this. You are getting off a 25% gain. If we look at this on a weekly and we go back to pre-pandemic, the pre-pandemic level is about 86. It's probably where you should feel comfortable with this. But the reality is the amount of drugs that they have and the price points that they're getting, I don't think it's a bad thing to have this one. The PE is 18. It's not super expensive. It's semi-expensive. It's down 4% year to date. It was up 35% in the last year. It's got a 2.76% dividend. So it's just a mainstay, something that you can put your hat into. And I think if you buy, 20% of your allotment in there, I think you're good. 20% of whatever you want to put in there, I think today you're good. NVIDIA had it. This is probably its 6th cross up here. I went over this with the AI. The algorithm had you in January 4th at 147. You're at 226 right now. I wouldn't buy it. It's just too high for me. I think you get pulled back down to about the 170 price point. And I think that's where you can feel comfortable putting in. Wells Fargo is a secondary cross up. This is one that I personally did buy at 41.50. You're at 48.39 right now. This is a secondary cross up. I would not buy this one. The algorithm has you in at 41.29. I got in at 41.50, I believe. You could have gotten in at the $40 range. The MACD is super high. The RSI is at 81. It's just way overbought. If you're in it, enjoy it. I think you've got a top here. I might be selling mine. We just passed the ex-dividend date. I think I could probably get it back down at 40 at some point in time. Another one that had a secondary cross-up is LICY, Lithium Americas. This one gapped up yesterday, and you've got this gap between 24 and 25, which it will pull back to. You're at 26 right now. This one also has a gap here between 22 and 23. The RSI is just too high. This is a secondary cross up. Back on January 4th, January 5th, we got to buy at $18. And again, you're at 26 right now. I just think it's too high. One that, again, had another cross up is in our Vanguard, VUG. This one's kind of crossing up left and right just at the top of this. The RSI is at 65. It's just overbought. The algorithm has had us in since 2011 on a Vanguard low-cost ETF. You're going to have a 20% gain on this one. Just huge on growth. That's enormous. XLV, which is the healthcare. Healthcare has been a bear, just a complete bear this year. Since December 15th, you have not had a winning trade in this one. It's just been completely downhill. XLV has you in at 132. I think you get back to this 200-day at 131. 132.79 is the algorithm. You're trading at 132.54. I think if you want XLV and you just want basically a spider sector of the healthcare industry, you can see this has just been kind of, that MACD is just completely flat. We'll expand this one up. It's not going anywhere. And you're just in no man's land as far as the RSI goes. So I do think that you're using that 200-day as support. I think you can probably get into this one. Healthcare in any kind of recession is just you're just seeing people move out of healthcare and into growth because growth has been so strong. XLF, the financials, this has been a monster. This is a secondary cross up. 33.92 back in December was the cross up. You're at 36, so you got a nice 10% move. And again, on a spider fund. We can talk about the VUG, getting all of that. But this is a secondary cross-up. It's just too high right now. One that it probably is getting a lift, and pardon the pun, from Uber is LYFT lift. You're at 17.57. This is a secondary cross-up. Back December 29th, we had a $10 cross-up. You've almost doubled your money in this. From 10.71, you're trading at 17. I think when tomorrow's earnings comes out, it's tomorrow post-market, I believe. Let me just look. Post-market. So tomorrow after the bell, my guess is your $20 stock. I mean, again, travel and stuff is coming back. Lyft is doing well. Amgen, this is a favorite of dividend folks who love this one. I think this is the one. Let me see. It's a healthcare stock. It's got a 3.49% dividend. I think during the pandemic, this was around 150. Let me just make sure I'm talking about the same stock. So 2020 around here, it was dipping under 200. And when it dipped under 200, you grab it around 200. And it's at 242 right now. If we run the algorithm, you can see it's got a buy-in here at 243 below the 200-day. You have that death cross right now. Question is this coming back? You got your ex-dividend date here, February 14th. You might see a little pop in this one. You might see it pulled back down to 220. 243.95 is the buy-in on Amgen, though. TRV, which is Travelers. This one has a cross-up here at 188. It's kind of just been fluttering here between the 177 and the 195. 188, again, it's an insurance company. You could buy it. It's in the Dow. The volume's kind of trending down. This isn't a super strong buy for me. Just honest to God, it's just kind of average. So I wouldn't expect this one to go up to over 200. Put it that way. But it does have a cross up. One that we've talked about before is Constellation Energy Group. This one has just been kind of floundering here between the $80 and $90 mark. 85, 88 is the buy-in. Now, this one you've gotten a buy-in at 82. You can see that MACD is just kind of fluttering right there. The RSI is in no man's land at 51. Their earnings are coming up February 15th. I would kind of hold off on this one. And what worries me is you're below that 200-day. And you've got this gap here between 69 and 68 and 69. I'm just not sure that we don't get pulled back down there. It's a utility. It's got a good dividend. CEG, let's just look. 0.66, so not even 1%. The problem is that they're not making money. It's a utility. It was downgraded January 17th. Their price target is 91. I just don't see a huge upside in this one, but I see more downside. So while it crossed up, and if you want to hold on to a utility, it's not bad. IDXX. This is IDEX Laboratories. This is part of the NASDAQ 100. This one is an ascending triangle. It's a secondary cross-up. Had you buy in here at $415, you're $500 right now. $415 on January 4th. This is one, again, it's part of the NASDAQ 100. This is a healthcare diagnostic research. The PE is 64. Hugely expensive. Hugely expensive. Its 52-week high is 560. So you do have 10% to get back to the 52-week high. If we look here, I'm sure there's some gaps that I can find in the daily. And the gaps are below, actually, to be honest. 420 to 427. To get back to this 600 level would be enormous. But, you do have some volume level here at 550. It's a 10% move if you want to risk that one. I don't know much about the stock other than, just what I'm seeing on the chart. Doesn't inspire me that, hey, there's a 20%, 10% move in that one. Not like as strong as I felt on Wells Fargo where I pulled the trigger. Workday is one that some folks have been asking me about, I think. This gap here between 144 and 156 worries me. But they're at 191. They're above the 200-day. This is secondary cross-up. January 13th, we had a buy-in here at 166. You're 191. You made your 20%. Be happy. Your earnings are coming up on February 27th. So it's a software company. I think it's fairly expensive, if I remember. Well, it's not making money. Its forward PE is 40. Downgrades on Deutsche Bank, down it to 195. Guggenheim has a sell at 142. And you're trading at 191. There's some risk there. BK, which is Bank of New York. I was looking at this one earlier. I semi-like this chart. Not for, hey, it's buy it here because it's just too high. But this is financials. This is Wells Fargo. This is Bank of America. I think you see an opportunity when these things pull back. And this has shown you that when it dips under that 200-day, you can get back above it. I think it's a well-run company. BK is one that, I don't have it in my portfolio just because, I'd rather hold XLF, to be honest with you. Banks are just not my thing. This is an interesting one, and I added it. It's in the energy sector, Comstock, CRK. This has a buy-in here at 1192. You have not had a winning trade since December on this one. And this is oil and gas. Their earnings are coming up on February 14th. It's an interesting one. Do your research. Again, you haven't won on this one. You haven't won at all in this year. Your PE is 3. It's in value. It's got a 4.19% dividend. Year to date, you're down 13%. But over the year, you're up 50%. Downgraded from Mizuho with a $17 price target. KeyBank, overweight to sector weight. Citigroup, buy to sell with a $14 price target. Well, you're at 11. So even at 14, you're talking about a 20% move there. At 17, you're talking about a much bigger move. So their earnings are coming out. Oil and gas has just been on a tear. The other thing that drew me to this is you look at these guys. Look at the buys. They're buying at 13, 14, 16, 18, 19, and this is just over the last year. They've been buying the whole way down. Now, it's not huge amounts. The chairman and CEO bought 1.6 million shares, $975,000 worth. They get discounts. So it's probably insiders, like employee stock purchase kind of thing. But they're buying the whole way down. So it kind of puts to me that this might be a good, $14, $15 price bounce, which you could take. And in the meantime, you're getting a 4% dividend. Do your due diligence, read some of these articles, not the Zacks one, read the PR Newswire, the Global Newswire, the FinViz Elite, if you're subscribed, Argus Research. They'll all tell you kind of what I can. The only thing that I can see is in the chart, it kind of makes me a little bit, hey, maybe this is a good one. But this gap down here between 940 and 960, that's in play, even though this was above the 200-day at the time. But I think you do get pulled back to this 200-day. There's enough volume up here at 17. You're building your volume down here at 11. But if you get past that $14 mark, it brings it right up here to 17 with that volume. So with the earnings coming up, I think that's an interesting one. Just thought that was interesting. Okay, 48 minutes. I am done. If you made it this far, rate it. Just hit the 5-star. Go over to YouTube and hit subscribe for me. You can see all the charts on YouTube. If you've got any questions, hit me up in the Facebook group. You can post something in the Facebook group if you want a group answer. Hit me up on Instagram. Hit me up on Twitter. Follow me everywhere. The links are down below. If you're interested in TrendSpider, the code DSP25 gets you 25% off. I will give you access to my algorithm. You can watch the YouTube video that I have on my YouTube channel. That is an introduction to TrendSpider to make you a better trader / investor. And you can look at that to see some of the details of what you get with TrendSpider. There's a 7-day free trial. Just remember, to get my algorithm, you need to sign up with DSP25 or give me your email address and I'll have them move you over, one or the other. But yeah, if you have any questions, hit me up. Thanks, guys. Okay, share, export song to disk. How come I go on for so long? Okay, let me read your comments. Let me see. What did Burry say? I think his handle is Cassandra, if I'm not mistaken. Burry's been wrong. I mean, Burry has been wrong. Did he delete it already? Because do I have to go to the... Oh. Yeah, this was last night. 100% sarcastic. I saw this last night. 100% sarcastic. This is the 2002. His assumption is that we are here. Well, I shouldn't say here. This was October, and that we're here. So his assumption is that we're probably at this point continuing up, because again, this is 1100. This is the S&P to 1200, and then you're dipping down, and then you went all the way down to 800. So it kind of fits the narrative of back down to the October lows and going even lower. TrendSpider commented. Burry's Twitter account for the 100th time. Yeah. Oh, I love that. I didn't know that. Again, a guy who's a billionaire who kind of... Oh, Naval I want to follow. I like Naval. And I like Ray Dalio. Burry to me is good. He knows what he's talking about. But, it's like Tom Lee. Tom Lee is the forever bull. I mean, that guy is so bullish. Even when we were down 20% last year, yeah, I think it's coming back. Tom Lee is right sometimes. Michael Burry is right sometimes. They're just, yeah. They're not understanding that this guy never says the market is going up. I mean, he's never said that the market's going up. I've got to restart Active Trader Pro again. No. For some reason, Active Trader Pro doesn't like. I have Michael Burry made a small fortune in 2008 because the move was so drastic and he didn't time it, but he knew insider information. It wasn't something that he kind of, it wasn't a guess. Let's just put it that way. Today, I think he's guessing. That's my take on it. I think he's 100% guessing. Let's see. By the way, if you're here, hit the thumbs up button. I keep forgetting to tell everybody that. Sherry, I didn't know you worked for United. I like United. Like I said, I think it's good guys and bad guys in the airline industry, and I think some of the bad guys in my mind are the C-suite, not the workers. I'm going to post the podcast, quick GarageBand. I want to see where GNS is. Boyle's at 644. It's down 5%. Kind of like I thought it would be. Bed Bath & Beyond has made its way down to $2. Tesla's holding at 200. Amazon is about to dip under 100, and that's where I will buy it. Ford's hype rally continues to be just that, a hype rally. Uber has been pulling back from its crazy gains to just a normal gain. SOUN is up 10%. That's got some momentum on it. I keep forgetting to bring up Snap with their earnings. I mean, Snap, look, you could have bought it here a couple days ago at 10. It's at $12. Microsoft is continuing the crazy move. I had my parents sell out of Intel at 30. Let me get this moved over. Anchor. And I got to put in, tomorrow is Thursday. I am not doing a podcast tomorrow, by the way. I am going hiking. New episode. So I will not be on in the morning. Turn your notifications on because I probably will be in the afternoon doing a podcast. Like I said, a lot of people listen on their way home anyway. I'm going to do P-Coat. I haven't done P-Coat in a while. Insert ad. And I'll be right back. Hey, Daisy. Love you. Bye, Sherry. Oh, I hope. God, I hope. Okay, it's processing. Crew? That's why when people ask me, hey, should I take profits? The answer is always yes. I mean, think if you had bought Boyle yesterday thinking that, oh my God, here's the run. You were wrong. And crew, there are times when you can always do that. The key goal, I think the key to any profitable trader are two things. It is understanding direction and, wow, I tell you what, nobody listened to the freaking podcast yesterday. Understanding direction and size, trade size. Because when you learn how to take profits, you have to learn how to take profits, and that's kind of key. Let's see, we're gonna focus on those. I'm gonna say. Microsoft, NVIDIA, CMG, NPH, CRW, PanW, TSM, CVS, Uber, And I've got all of these in there. Okay. Market update 2/9/23. Okay, publish now. Okay, we're gonna put it up on Twitter. Let's see. Hey crew, by the way, I'm gonna pull up Bed Bath & Beyond. I mean, I hate to sell when it's sliding like this, but you have no confirmation that this is even getting back to 3. I mean, I'd rather see you sell at 266 and buy it back in at 240 once it gains confirmation. But in my mind, cut your losses. Take the loss, move on. That would be my take on it. But you've seen me kind of day trade where I just I got greedy on what? MSGM, I think it was. And I didn't take the win. And I wound up losing like $800 on that trade. And it was all because I got greedy. Let's do X. Tweet. I'm going to tweet out a bunch. Twitter. I think yesterday's show didn't do well because I didn't tweet out a lot. I should change the logo a little, but oh well. CMG, eBay, Uber, Tesla's already in there. Baba, ATVI, GNS. Take the scans out. We're gonna cut and we'll tweet out again. And I need to tweet out. Oh no. Twitter. And I'm going to go over here. Oil, KLD, NVIDIA, AI. By the way, AI is up another 2%. I'm sorry, 10%. Snap, INTC, VIXI is down, Meta, BAC, I can get rid of 2, I know I can get rid of 2, and there we go. Okay. I can't believe nobody listened to my masterpiece yesterday. Let me see. Let me look at my analytics of a recent. Oh, is there enough for? Median playtime, 52 minutes, 42 seconds. This was only a 57-minute podcast. Wow. People like that one. People really listen to that one. Okay. We're going to profile. There we go. I was replying. With meme stocks like BBAI, does the typical technical analysis hold true as often? Like if I cut my losses, I'm worried it'll just rocket back up due to some random meme stock nonsense. So here's what it is. Remember, my algorithm is based on a 4-hour chart. So let's look at BBBY. And we'll go to Safari View. Here's what I'll do. We're going to look at 4 charts. I'm going to take out the strategy tester because I don't think that the strategy tester, will you be able to see all 4 charts? No, you're going to be able to see 2 charts. So we're just going to go to 2 charts. And I'll put the strategy tester back in. And we will, no. Come on, TrendSpider, work with me. 2 charts side to side. Okay, and we'll run the algo. I can run the algo on the 4-hour, and you can see them both here. Now, if I change this to a 65-minute, the charts look different. So when you're looking at charts and you're looking for confirmation, look at how this one lost confirmation here at about, I'd say, yesterday afternoon, it lost confirmation. If you're looking at 65-minute charts and you're looking to where it lost its confirmation, this is the open. It had confirmation. It lost confirmation here at about 1350. I'm sorry, this is February 3rd. So we're going all the way here, February 7th. You lost confirmation here at 10:35 yesterday. So what you want to do with meme stocks, it does hold true. Meme stocks, it doesn't matter what it is. The quicker moving stocks, which are the meme stocks, just, oh, my Active Trader Pro is crashing. Okay, I got to restart Active Trader Pro. What you're going to do for meme stocks is just reduce the time frame. So crew, what time frame do you look at? If it's a daily chart and you're saying, yeah, I want to buy Bed Bath & Beyond, sorry, that ain't going to do it because it's moving too quick. If it's a 65-minute chart, like this one here on the right, it's probably just too quick for you. So if we just go back to a 1 chart, 1 symbol, and we go to our algorithm on 65 minutes, and we run this algorithm on 65 minutes, and you're going to see where it gets confirmation, where it doesn't. This is over the 8, when it crosses up on the 8-day, it buys. When it crosses down on the 8-day, it sells. And you can see how quick it moves. Now, the actual algorithm, this is what's crazy. I don't believe it. I just don't believe it. I don't believe the calculations here. That's possible, but I just don't believe it. But it is true. When you lose confirmation on the 9-day or the 21-day or the 50, whatever you're looking at, whatever you use to trade, for quicker moving stocks, I like an SMA 6-day, maybe a 5-day. So 5-day gets you, hold on one second. For quicker moving stocks, the tighter the time frame, the more confirmation and things of that sort and stuff that you're going to get. It's just, the simple basis of it is that it's going to be better off for you to tighten up that time frame. So smaller candles, meaning time frame candles, 1 minute, 5 minute, whatever you want. Smaller SMA, EMA, whatever you want to use to try and find your confirmation. And I'll show you more here on Active Trader Pro, since Active Trader Pro is a free one that you can actually download. We'll look at Bed Bath & Beyond. And hopefully this stays up. It just crashed on me, but in Lifestyle, I will give you blood when I can. So here's Bed Bath & Beyond. This is a 5-minute candle, okay? So each candle represents a snapshot of 5 minutes. You have no confirmation whatsoever. If we go back to and see this down here, this shaded gray on the bottom of Active Trader Pro, that is volume. And when volume kind of picks up here in the 5-minute candle, you can see Well, no, it's not volume. I forget what it is. It might be volume. This is your volume here. But you can see when volume picks up and price goes up, look at that move. It's above that 9-day. You have confirmation. You lost it here, but you gained it back. And you had it all the way here. When you're looking at here and you lose that confirmation and you're down below, see how it goes down? Then as we scroll over and we look at this, see again, it's below the 21-day, so it doesn't have any, long-term because it's a 5-minute candle. It's below that 9-day, but it's moving up on that 90. Crosses that 21, boom, we've got some type of confirmation, but it just capitulates right there. Makes a move up, but then you move down and you've got this 9-day. And then today, as you're moving in, you've got nothing. Nothing. So yeah, you're learning how to read stock charts and read confirmation and see things when they're moving and understanding, could you move from $2.60 right now all the way up to $3.45? Absolutely. You'd miss out. But you know what? I'd rather see you out at $2.65 right now and be, like I said, be able to buy back in at $2.40 when you start to see a confirmation above that 9-day. Bed Bath & Beyond, they're not going bankrupt. You have people willing to sell their shares to the shorts. So the shorts, it's 46% short interest as of 1/13. 46% of the shares are held by shorts. Supposedly held by shorts. But I guarantee you there's naked short selling going on here. I mean, you don't move, the majority of shares in a day. I mean, look at GNS. They're threatening lawsuits all day long against naked short selling. It's all hype. It's all hype. So, okay. With that, I posted the podcast. You know what I wanted to do? So here, I wanted to go to YouTube. And I wanted to look at some day trading stuff. Yeah, but here's the thing. Remember, crew, that when they basically give out stock, the shorts are just able to buy those shares at a significantly higher price, which makes them money. So say you short the stock at $1, but there's only, let's look at Bed Bath & Beyond. So you've got a float of 115 million shares. 117 million are outstanding. That's a huge amount outstanding because usually the company holds a bunch. Say you buy a short at $1. And, back here you can see it. Back in August where it ran up to 25. You had short interest on this. There was assumption that they were going to declare bankruptcy and boom, it went up to 25. That's what you started to see here where it went to, almost $6. This is part of the problem of trying to trade something with a quote unquote hype rally, is that the rug just gets pulled out from underneath you more often than not. Most people who bought here at $7 never expected it to go to 25. They were ready to sell out at 10. These are daily charts. They were waiting on confirmation. They might have gotten confirmation. They might have gotten out. The smart people got out and just sold. The people who said, yeah, it's going to go back to 25 again, who were buying here at 24, yeah, it's going to go back. There are probably people holding on here at 2 who bought at 24. So you're not alone. You are not alone in this one. Let's see who's live. Music for work. God, there's a lot of music. Raccoon Saloon is live. But what I wanted to do is show you guys this TrendSpider. Let's look up TrendSpider. Yeah. 5 awesome day trading scanners on TrendSpider. want show you guys this because show more. Let's see what this brings us to.
In this video, I'm going to share 5 powerful scanners that you can use to find
Here.
a bunch of different types of day trading setups.
I'm going to pause that. So if you just click on that link, here, I'll put this video up here. Boom, 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 boom. Dude, my experience is the same as yours. I got screwed out of a bunch of that stuff, so I've been there. Trust me, if you start journaling your trades and understanding where you went wrong, you're less likely to repeat that. So here, 821 EMA cross up, login and import. We're going to look at this one. You're about to subscribe to a scanner. This means that you will be able to use it. Subscribe. Okay. So default. So here's what we're going to do. Click here to open it. This is a day trading scanner. Market scanner. We just subscribed to it. Oh, okay. Plan limited to 200. So this is a scanner that 821. I just imported it. We can set it up as a market scanner if we wanted to, but it's automatically in here. Let's see. EMA cross up, 821 EMA cross up. So if we just scan this and we scan the NYSE, I'm not going to scan the NYSE. You know what I'm going to do? I'm going to scan our core investments. And we're going to go core investments. I like this one. Ooh, Apple. Make your own copy. Let's see. And cross up. We're going to say... let's say save. Okay. Where do I? Oh. Let's see. Huh. I guess I didn't save it. 821. We're going to look at 821 cross-ups. Make your own copy. Boyle sucks. Here, I'll look at Boyle for you. Joe, I just don't think Boyle is a good... I mean, you've lost all confirmation. kind of like I said yesterday, you can day trade BOIL all you want. Don't hold it. Yesterday, I told Zephan, and I think I told you when you were on it, I said buy at 650. And that was probably around here when it was trading at 675. I said 650 looks to me, because I saw this bounce, I said 650 is probably a decent buy on this one. And if you bought at 650, you could have gotten out at, $7 anytime, close to 7. And then it lost its confirmation here at about 6. Looks like 5:45. It lost its confirmation, and it's just been in a slide ever since. There's never been a strong move. But again, I think you're playing a gambling game. The KOLD has all of the confirmation and all of the move. We can look at, I can bring it up again here in TrendSpider, but let's see. This is on a 15-minute candle. Apple and Target. Boy, I don't even want to look at my... Okay, it's 11 o'clock. What? You bought a bunch at 675. Cut your losses or be patient. Cut your losses. I mean, honest to God, unless you want to sit here and watch a chart all day, cut your losses. I can't... I'll go back here. Here. We'll go back to the strategy tester. Let's do our 65 minute. Let's do our day trading. And this is why I'm on a 65 on a 4-hour chart on my algorithm. I just don't like sitting next to the screen all day, because this is a triple levered ETF. Okay, here on the 65 minute, and this is crazy, but the 65 minute candle algorithm in TrendSpider. Joe, do you have TrendSpider? If you got TrendSpider, set up this 65 minute one. I mean, again, yesterday it didn't make sense to get in yesterday at all. It had a buy-in here February 6th at $5.91. It had another buy on February 6th at $6, and it held that all the way up until today. Made no sense to get in, but KOLD, on the other hand, on the 65-minute algorithm, it's gotten you out, I think, out of the latest one, but let's wait and see the chart. Yeah, it's gotten you out, but it's going to get you back in. There's the MACD cross up. I mean, again, KOLD has all of the momentum. Yeah, if you want to, can you do 65-minute candles? Here, let's look at Active Trader Pro. I don't have to save this. So let's look at Active Trader Pro, and we'll do 60-minute candles, okay? That's as close as you're going to get to a 65-minute candle on Active Trader Pro. 60-minute candles, and you've got your 9-day right there. If we do another one, indicator, I'm going to put an EMA, and I'm going to say another EMA, and rather than a 20-day, I'm going to go to an 8-day. Okay, and your 8-day is blue now. And it's hard to see because the 8-day it's right there. And so if you want to get as close as you can on Active Trader Pro as you can on TrendSpider. Remember, in TrendSpider sends you the alerts and stuff, but set up 60-minute candles and put in an 8-day EMA. And I just did that in blue here on Active Trader Pro. And so when you see the cross up on the 60-minute candle, buy. When you see the cross down on the 60-minute candle, sell. I don't know what it looks like back testing that, because you can't back test. By the way, if you're in Fidelity, Joe, there is a, let me look. This, if you don't want to spend on back testing, because that's what that's a big part of what TrendSpider is the back testing. But that link right there that I sent you, you can get free back testing from that tool as long as you're with Fidelity. Now I know that I don't know the tool, so I was looking at it when I was trying to evaluate should I renew TrendSpider, and I got annoyed, and I just said fuck it. I'm paying the $400 a year for TrendSpider. So I just wound up paying for the $400 for TrendSpider. And wow, I'm really down today. Yeah, the markets have taken a significant downturn. But I would say KOLD right now, it looks like this one's turning. If I look at the algorithm on TrendSpider here, does it show? Yeah, it does show yeah. So you can see right here, there is a significant downturn of KOLD, down to about 58, goes under 60. It's back up 60. Yeah, Joe, that capitalized tool seemed kind of pretty cool. Fidelity gives it to you for free, so it's worth a shot if you want to try that before signing up for TrendSpider. But my trust is that I can make $300 a year or $400 a year, even $500 a year using TrendSpider. It's a tool that just kind of pays for itself for me. And again, I get crazed when I'm without it. Like yesterday, somebody asked me, hey, is Goldman Sachs a good buy because it's the weekly stock pick? I was like, dude, I'm not in front of my computer and I don't trust myself without TrendSpider. And the one stock that's really up is Tesla. The VIX is up 1.77. Where's UVIXY? I thought UVIXY was in our list. I got to get going. It's 11:04. I was going to get out of here. Oh, no, I don't want this. I'm going back to 5 minute. 5 minute, and I'm deleting the 8-day. That's UVIXY. It is up 2%. Okay. If you have any questions, hit me up on the socials. I will talk to you guys tomorrow. I'm going hiking. So set your alerts because I may